This is Horizons, Middle East and Africa. Our top stories this morning. The FBI is investigating a suspected terrorist attack in New Orleans after a truck plows into a crowd, killing at least 15 people. Police are also looking into whether a Tesla cybertruck explosion outside the Trump Hotel in Las Vegas may be related to the New Orleans incident. Plus, no more Russian gas will flow to Europe via Ukraine after both sides allowed a transit deal to expire, closing off a route that has operated for 5 decades. It's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai in for Jumana Bursachi. Well, good morning again. Happy New Year and welcome to the first official trading session of 2025. If we get a look at how markets are doing as we head into this new year, we do seem to be seeing a little bit more optimism, at least as far as U.S. equities are concerned. You can see here S&P 500 and NASDAQ futures both pushing higher. And this is after the weakness that we saw close out 2024. The S&P 500 had been down for 4 straight sessions to finish off the new year. That is the longest losing streak that we've seen for the benchmark since September. So the big question now is whether that weakness will carry through as perhaps we get trading volumes returning to more normal levels as people return from holidays and things like that. Now, going cross asset, you can see the U.S. dollar is seeing a bit of weakness this morning after its best year since 2015. And Brent is on the up this morning, trading pretty close to $75 a barrel. Now let's continue talking about commodities and talk about gold, because gold is just coming off of what has been a stellar year. You can see there a 27% gain over 2024. And really that this chart just says it all, really. There's a lot of outperformance there for gold. This was driven by central bank buying, cuts in interest rates by the Fed. And then also there was a lot of haven buying over the course of the year as we had geopolitics playing up. Base metals, though, they were basically little change on the year, 6%. And then lithium and iron ore, those are two places that saw big losses as we had a lot of weakness in the Chinese economy that filtered down to those metals. Now, let's move on from markets and talk about one of the biggest stories that is making headlines today. The FBI says it's investigating a terrorist attack and hunting possible accomplices after a truck was deliberately driven into a crowd in New Orleans, killing at least 15 people. And President Biden says police are looking into any possible link between that attack and the explosion of a Tesla cybertruck in Las Vegas.
We're tracking the explosion of a cybertruck outside the Trump Hotel in Las Vegas. Law enforcement and the intelligence community are investigating this as well, including whether there's any possible connection with the attack in New Orleans. Thus far, there's nothing to report on that score at this time.
For more, let's bring in our U.S. Managing Editor, Miles Miller. So, Miles, thanks for joining us. What's the latest that we know on this investigation?
Yeah, right now we know federal investigators are trying to piece through the background of this suspect. We're talking about 42-year-old U.S. Army veteran Shamsud Din Jabbar. Now, we are told that he rented a pickup truck on the app Turo and drove that pickup truck into crowds of people in the French Quarter on Bourbon Street. Now, we know that investigators recovered multiple improvised explosive devices and an ISIS flag inside his vehicle, all evidence that suggests a terror plot. Now, the FBI insists he may not have acted alone, and they are urging anyone with information to come forward immediately. Now, this attack was quickly followed by an incident that happened in Las Vegas. A Tesla cybertruck exploded outside of President-elect Donald Trump's hotel in Vegas, killing the driver and wounding at least 7 bystanders. Now, the one thing that is a connection between these two incidents is that both of those vehicles were rented on the app Turo. Right now, there is no link between the two incidents, but Elon Musk said the blast was caused by a bomb or powerful fireworks, but officials are aggressively investigating these incidents and trying to figure out if there are any links to terror. But in both of these incidents, the FBI is investigating these as acts of terror.
What kind of implications do these events hold for Donald Trump at the moment? I mean, it raises a lot of security concerns just ahead of him taking up the White House in a few short weeks.
Yeah, that's right. President-elect Donald Trump, who takes office on January 20th, called these attacks an urgent reminder of the need for robust national security. Of course, the FBI is probing both of these crime scenes, and Donald Trump has pledged to replace the FBI director. He's already nominated someone to replace the FBI director. He's already nominated someone to be Homeland Security chief. But this highlights the need for robust domestic security. When we talk about everything from homegrown terrorism to attacks from ISIS and the like, this threat of homegrown terrorism is not new. In fact, the FBI just a few weeks ago sent out a memo joint with the Department of Homeland Security warning about possible vehicle ramming attacks, but that was focused on Times Square. And then you have this incident happening in New Orleans, which is a place where many people go to celebrate the new year. And so it's something that's always top of mind, something that they're always planning for. In fact, when that pickup truck rammed those people, Bourbon Street was shut down by police. And that quick response by police, who were already pre-positioned there, allowed many more lives to be saved and allowed that police to neutralize that gunman very quickly.
Have we heard from Donald Trump at all on the issues?
Yeah, Donald Trump released a statement basically calling for a robust investigation into what happened here, of course, saying that this is an urgent reminder of the need for that robust national security. We heard from President Biden as well, saying that the law enforcement intelligence community is working around the clock to determine if these events are connected. But Donald Trump looking to really showcase on the national stage and the global stage that when he takes office, that issues of terrorism will be of great concern and issues of national security will be of great concern. Of course, it was just recently where the president-elect said that they had defeated ISIS. This is an attack that the FBI believes was inspired by ISIS. So while this is not ISIS on the shores of the United States, it is very much an ISIS-inspired attack, and that's something that is going to be very important for investigators to look at. How do you prevent this kind of homegrown extremism? And then in their investigation into what happened here, was there any foreign funding for this attack, or was this just someone who was disgruntled or upset and basically carried out this attack on his own without any material support? But as of right now, the FBI certainly believes that there are other people who were involved in the planning of this and that he may not have acted alone.
Miles, really thorough reporting there. Thanks for breaking all of that down for us. That's U.S. Managing Editor for Bloomberg TV, Miles Miller. And still ahead, we'll get the outlook for currency markets with the central bank's rate path in focus. ANZ's head of FX research joins us next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Russian gas has stopped flowing to Europe via Ukraine, closing off a route that's operated for 5 decades. The stoppage will force Central European countries to source more expensive gas from elsewhere. Bloomberg's managing editor for commodities and energy, Clara Ferreiro Marquez, joins the conversation now. So, Clara, thanks for joining us this morning. How is this going to impact the European energy market and also global energy markets? I mean, we're talking about a lot of natural gas supply that's now out of the market, essentially, right?
It's a really interesting step because in a way it shouldn't be that significant. It's about 5% of European supply, but it's a milestone, both in terms of Europe weaning itself off Russian gas and in terms of it's an end of an era. If you think that Russia or the Soviet Union, as it then was, started to connect its gas to Europe in the late 60s, this is really drawing that to a close. There is still one remaining pipeline, Turk Stream, but this is going to close that period, and I think it shows just how much Europe has worked towards removing Russian gas. Remember that if we look back to just before the war, Europe was taking about 40% of its gas by pipeline from Russia. Now it's going to be down to less than 10%. So very, very significant efforts there.
What does this mean for Russia then?
Well, for Russia, it's a very interesting problem to resolve. So obviously they huge gas producers. A lot of the European market has been taken offline. Europe does still take Russian gas, but a lot less than it was taking before. This means Russia really has to double down on liquefied natural gas, on LNG. There, however, it is coping with some very significant sanctions from the US. And so we'll have to see over the next year or so how they manage to work around it, and if they do. Thank you.
All right, Clara, thanks so much for all the insight. That's Bloomberg's managing editor for commodities and energy, Clara Ferreira Marquez. Well, into markets now. The Chinese yuan is in focus today. Avril Hong is in our Singapore studio with more. Avril, what's going on?
Yeah, Christine, I mean, as you say, the yuan is really in focus today, and this is against the backdrop of those concerns surrounding the Chinese economy. It's really been on the back foot. And with the case of U.S. exceptionalism, that's also meant that, it, along with all these Asia currencies, have kind of succumbed to the greenback strength. So actually, earlier in the week, we saw it top the 736 level. And this was also blamed on thin trading conditions. But that also meant that today we saw the PBOC stepping in terms of support for the renminbi, and it was the strongest fix versus estimates. 1,300 pips. This is the strongest we've seen it since July, and all this is coming on yet more indications of Chinese economic weakness. You look at the private survey of manufacturing activity that showed expansion, but it really missed the mark based on the Caixin manufacturing PMI. So overall, it points to an economy that's still in need of support, and the Chinese yuan really on the back foot today, despite some support from the PBOC. Christine.
Thanks so much, Avril. And I do want to note that just as we look to equities in Asia, we got the MSCI Asia Pacific moving lower, the Hang Seng, China CSI 300 all down more than 1%. So while we are seeing a bit of optimism in the U.S. futures market, it's pretty red in Asia. Well, let's bring in Mahjabeen Zaman now, who's head of FX research at ANZ. Mahjabeen, great to have you with us today on the first trading day of the new year. Avril there just broke down what's going on with the yuan for us, but let's talk about the dollar. We've got weakness coming through the market this morning, but still we're coming off of the best year since 2015 for the greenback. Where do you think we go from here?
Happy New Year. Look, I think starting with the year, it's really hard to argue against the US dollar on a fundamental basis. When we look at US inflation surprises, we look at US economic surprises, all of them are really standing out relative to other major economies. So yes, we have seen the dollar run up ahead into the new year. We continue to expect dollar to remain overvalued, or at least firm, at least into the first half of this year. Of course, talking around the U.S. exceptionalism story, that's one thing. And of course, not forgetting, Trump's policies once his inauguration comes through later this month.
What are your calls for 2024 in terms of the broader FX market?
Look, I think we can't ignore Trump's policies, and it's interesting to see that Trump's first presidency, much of the impact of tariffs was really absorbed from foreign exchange. Now, of course, a stronger dollar will impact different currencies differently. For example, if we do get across the board tariffs, economies that have a larger contribution towards manufacturing as part of their GDP, like the European Union, will likely be more sensitive to blanket tariffs, which means that the growth story, which is already pretty weak in the euro, will likely continue to weigh further on the euro if that comes through, relative to more services-driven economies such as Australia, which will be less sensitive to across the blanket tariffs, for example.
And what are you expecting when it comes to tariffs? I mean, I've been looking at your insights, and it sounds like you perhaps don't see Trump being as harsh as the rhetoric that we've heard from him suggests.
Yeah, look, I think it will be more of a sequential approach. We do think that where he has an opportunity to do an executive order first, which is tariffs and immigration, might come through quicker than the others, which needs Congress approval. But we don't think he's going to go through the 60% of tariffs on China. We think he's going to go sequential, and there might be room for a conversation or a negotiation with China as well. But we'll have to wait to see.
And let's talk about central banks for a minute and go to the Fed, because also you have a call here for 3 rate cuts over 2025. So that's a bit more than the Fed has said and a bit more than markets are predicting as well. What are your views and why do you see the need for 3 rate cuts?
Look, we think market is terribly hawkish, and that's obviously playing out in FX and yields. It does look like, based on the recent FOMC meeting, that the Fed is comfortable now with the labor market, and now, of course, worried that inflation is going to worsen. Maybe they are preempting future policies that might come through on the political front. But, we scale that back, and just, when the Federal Reserve cut 50 basis points in September, labor was one of their biggest concerns. But really looking at the data, we can't ignore that labor market story. Yes, non-farm payrolls or job growth, on the broader scale looks okay. But when you break it down, you can see that the private sector is starting to look much more weaker than generally the big number suggests, and much of the growth is really in the public sector side of things. And so again, we're seeing drops in job openings and all of that. And if that continues to play out, we think that might drive the Fed towards further easing. And again, coming back to the fact, whether it's 2 rate cuts this year or 3 rate cuts this year, still relative to the rest of the world, U.S. yield differential is going to be much higher, and that's still going to be dollar supportive.
Yeah, and how about over at the BOJ? They've been quite non-committal in terms of the timing of the next rate hike. Some now saying that March is more likely. Just a couple of weeks ago, it was looking like perhaps January was on the table. What are your views on where the BOJ is going to take their policy?
Look, I think with Bank of Japan, it's not about if, but when, and we are expecting 2 further hikes in 2025. Of course, like Bank of Japan, Ueda recently said, waiting on wages hike trends as well as Trump's policy. And, I think for Japan, there's 2 things to look at. One is, of course, the external drivers. Net exports have been a large drag on Japan's GDP. Of course, if we are talking and we are thinking generally global growth environment outside the U.S. is going to be a bit softer, then you would argue that maybe that weaker yen might be helpful for those exporters, provide a bit of that offsetting effect. However, on the domestic side of things, you look at wages, you look at business sentiment, you look at services PPI, all of that really does point to, things moving higher, demand stays, private demand stays pretty strong. And really for us, that really points to, future rate hikes coming up, and possibly the next one will be in Q1.
All right, well, we are officially in Q1, so that's interesting. Happy New Year to you, Mahjabeen, and thanks so much for joining us this morning. That's Mahjabeen Zaman, ANZ Head of FX Research. Well, coming up, Kenya's annual inflation rate climbs for a 2nd consecutive month. We take a look at the country's economy and politics a bit later in the show. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Chinese EV giant BYD hit a new monthly sales record in December, spurred on by subsidies and extra incentives for buyers. For more, let's bring in Bloomberg Asia transport reporter Linda Liu, who joins us from Hong Kong. So, Linda, record sales numbers for BYD here. Talk us through what drove these record sales and what the record sales say about China's electric vehicle market.
Yeah, so BYD really rode a wave of popularity of its affordable models, as well as a Chinese government subsidy that gave out rebates for customers that traded in their older vehicles for new EVs. So this really vaulted BYD to achieve a historic 4.27 million vehicle sales for 2024, and it's actually brought it closer to closing the gap with Tesla as the world's best-selling EV brand. So BYD sells hybrids as well as electric vehicles, and they're just less than a few tens of thousands of units from Tesla's to 2024 deliveries.
Right, so they're pretty competitive with one another then. We are also expected to get Tesla full-year delivery figures a bit later this week, I believe. And I think the expectation is that it may not actually meet its guidance. Why is that the expectation, and what does that say about global EV demand?
Yeah, so analysts' estimates have put its fourth quarter deliveries at a record high. But it looks like it may not help Tesla achieve its guidance of a slight growth over 2023 deliveries, something of over 1.8 million vehicles for this year. Tesla's experience is showing a weakening global demand for EVs. We're also seeing other automakers like Volkswagen and Mercedes, BMW, they've kind of had to scale back their EV ambitions, kind of coming down from some of the sales goal they've set for EVs in the near future. So Tesla is hoping that they can achieve new growth in the coming year with hopefully trialing their autonomous robotaxi service, as well as newer, more affordable models.
Thanks for breaking all of that down for us, Linda. That's Bloomberg Asia transport reporter Linda Liu. Now for a look at some of the other stories that we are following this morning. A new round of nuclear talks between Iran and European countries is set to begin on January 13th in Geneva. The semi-official Iranian Students News Agency quotes the nation's deputy foreign minister saying the meeting will be about dialogue and consultation, not negotiation. Representatives from the UK, France, and Germany are expected to attend. Former Israeli Defense Minister Yoav Gallant has announced he will soon resign from Parliament. Gallant was fired as Defense Minister on November 5th over what Prime Minister Benjamin Netanyahu then described as, quote, significant gaps between the two men over the war. His resignation is likely to make it easier for Netanyahu to muster majorities in some crucial parliamentary votes. President-elect Donald Trump says he will lobby House Republicans if necessary to help elect Mike Johnson as Speaker. Trump endorsed Johnson on Monday ahead of a House vote that's due to happen tomorrow. Johnson faces criticism within the party after backing a temporary spending deal that left out some Trump demands. Now, let's talk more about how markets are doing as we head into the bottom half hour of the show. And you can see on the screen here that it's pretty green, actually. You've got S&P 500 futures up, NASDAQ 100 futures up, the Dow, and Europe. So we're looking like we are heading for a solid open on Wall Street. We are seeing some weakness come through in Asia. And also just note that cash trading is closed today. For Treasuries, cash trading is closed today as there's a holiday in Japan. Now, coming up, global sovereign wealth fund investments pick up in 2024 with the Middle East topping the list. We get the latest insights next with Diego Lopez from Global SWF. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. The FBI is investigating a suspected terrorist attack in New Orleans after a truck plows into a crowd, killing at least 15 people. Police are also looking into whether a Tesla cybertruck explosion outside the Trump Hotel in Las Vegas may be related to the New Orleans incident. Plus, no more Russian gas will flow to Europe via Ukraine after both sides allowed a transit deal to expire, closing off a route that has operated for 5 decades. It's just gone 8:30 a.m. across the Emirates. I'm Christine Burke in Dubai. Well, as ever at Bloomberg, let's start this back half of the hour by looking at where markets are as we head into, or we are in, the first official trading session of 2025. And what I will say is that we're seeing a bit of disjointed trading at the moment. So when we look at U.S. equity futures, we are seeing a decent amount of strength. You can see here that we're up about 0.3%. However, when you look over to Asia this morning, there is a lot of of weakness coming through, and specifically coming through for Chinese shares. We do have Japan closed today for a holiday, and there's no cash treasuries trading going on at the moment. So do note that. If we look at other assets this morning, the dollar is weaker after closing out its best year since 2015. And Brent crude is having a nice little start there as well. You can see that we're almost at $75 for Brent crude. We got a report overnight out of the U.S. that U.S. stockpiles there dropped. So perhaps that's giving just a little bit of a boost to oil this morning. And I want to talk about another commodity that's coming off of a stellar year, and that is gold. So gold just finished 2024 with gains of 27%. And this chart shows you here just how much of an outperformer it was among metals for 2024. Base metals as a whole just climbing 6%. And then lithium and iron ore were down quite significantly as we had concerns coming through around the Chinese economy. So that is the story there with metals. And just note also this morning, we are seeing a lot of strength for silver. We have silver futures or spot silver up about 1.5% and silver futures up more than 1.5%. So keep an eye on silver as we move into 2025. Well, let's turn now to the world of sovereign wealth funds. Abu Dhabi's Mubadala has been the most active in 2024 as it ramped up deal making across the board. From private credit to AI, you name it, they have a stake. The UAE's sovereign fund has overtaken Saudi Arabia's PIF, which was most active in 2023, but pulled back on spending last year as it focused more on domestic projects. A report by research consultancy Global SWF says Mubadala spent almost $30 billion last year, and that was a jump of 67% from 2023. Diego Lopez is founder and managing director at Global SFW, and he joins us now. Diego, great to have you here so quickly on the heels of your annual report, which you just released yesterday. When we look at this report, Abu Dhabi is all over the top of the list. It's not just Mubadala. Talk us through the kind of investments that we are seeing from the Emirate.
Absolutely. Thank you, Christine. Happy New Year, and thank you for having me. It's true. I mean, Mubadala had a stellar year, and you say correctly. I mean, from in every single industry, every single region, they were active. I mean, the thing with Mubadala now is that it's grown to different entities, right? So they do have the Abu Dhabi Investment Council, which acts more like an endowment fund. They do have the Mubadala Capital arm, which has become very active because they've raised a lot of $1 billion from third-party investors. And now they got MGX, which, as you know, is a joint venture with G42, and it's been very active in all AI sort of things. So in every single industry, every single region, I mean, 85% of the capital that you mentioned is being deployed in developed markets. So that seems to have been the focus this year. But in reality, they are investing in China, India, and all sort of emerging markets as well.
Yeah, when we look globally at the amount of capital that was deployed across sovereign wealth funds, $136 billion, and it really was funds here in the Middle East that dominated. Talk to me about what we saw out of Saudi Arabia, because the PIF was the biggest spender in 2023, but not in 2024. It fell back.
Yeah, absolutely. So out of the 136 that you mentioned, 82 billion were deployed by what we call the Oil Five, right? So these are the three funds from Abu Dhabi. So ADIA, Mubadala ADQ, as well as PIF and QIA. So these are the five most active funds, not only in the Gulf, but globally, really. I mean, they were part of the top 10 globally. And they deploy, I mean, in every single industry. I mean, if we look at Saudi, it's true that they've come to a second or sort of third position after GIC in Singapore this year. But they are still very active domestically. I mean, they are deploying in every single giga project in the country. They are helping with all the heavy lifting in the economy. In the Abu Dhabi, we have what we call the Abu Dhabi approach, right? So the approach is different. Every fund looks at different things. In Saudi, you have the Saudi approach, which is basically PIF amalgamating all the efforts of the country. So they are very different. I mean, all the sovereigns at the end of the day are very different. But PIF has got a great year as well on the wraps.
Yeah, and what regions were the most popular? Where did we see this money invested? I have to ask this because when I'm looking at the report, it says that India and China continued to be popular, but that we saw a dramatic increase in popularity for the UK and Australia. That surprised me.
Yeah, that's true. I mean, the UK has had a great year. I think the amount of capital went up to 26 billion. Australia as well. I mean, Australia is partly because there are some Australian superannuation funds investing domestically, but we've seen a lot of activity from the Canadian funds, from the Middle Eastern funds, and the Singaporean funds into Australia as well. So for instance, we saw ADQ investing in Plenary Group, which is a huge manager for infrastructure down under. So those have become sort of fancy or topical. But as you said, India and China stay very popular as well, although emerging markets decrease as a whole. I believe it was 12% that drop in activity in emerging markets overall, but China and India in particular seem to be very active and increasing in the portfolio of sovereign investors.
What about where these funds are investing in terms of industry? Is it AI? Is it digital investment? What were the key themes that came through over the course of last year?
Yeah, it's interesting because we saw a lot of activity in private credit. And I think that's just natural because there's a lot of capital flowing into the Gulf as well, right? So if you look at all the major managers and bankers, they're all setting up offices in ADGM, DIFC, in King Abdullah Financial District in Saudi. So they're all setting up these huge sort of joint ventures to tackle private credit because I think that is naturally something new for sovereigns, and they're leveraging the knowledge and the know-how of large managers in that space. Another key theme of the year was infrastructure. So large infrastructure projects and large infrastructure funds raising, whether it was sustainability related or transportation. We saw a lot of activity there. And then lastly, as you said, digitalization. So from digital infrastructure, sort of fiber, telecom towers, and also data centers, obviously, but increasingly so AI, which we mentioned before, also space investing. So if you look at the UAE and Saudi, they both have great space programs, and they have got astronauts, 4 astronauts actually from Saudi and UAE in the past 2 years in space, and that has been rolled into Mubadala and PIF. So each of them has a sort of a space investing program. They being already investing in some of space companies overseas.
Where do you expect us to go from here? I mean, we are talking about sovereign wealth funds that now manage some $13 trillion in assets. How much more do you think we will see them deploy in 2025?
Yeah, I mean, it's interesting. It's difficult to see where the limit is, right? So we all thought that there was going to be a recession, there was going to be some slowdown in activity this year. In reality, it's just coming up and up and up. So it's difficult to see where the limit is. But we believe that funds in the Middle East in particular are going to keep growing just because they are reaping the rewards of high oil prices in the past 3 years. I mean, oil stayed at $80 this year on average, I believe. But still, that means that's about the break-even oil price for most of these economies. So that means that the sovereigns will keep receiving capital that they need to put to work. And then you have all the asset managers that I mentioned before creating this ecosystem where, again, they have to be active in the marketplace. So we expect the deal making to persist in the new year. We are a bit concerned with exposure to the Magnificent Seven. We did an analysis on the annual report where we believe that the exposure was pretty significant across the sovereigns globally. So there could be some correction there. But in terms of private markets, we believe that the activity is going to persist quite significantly next year.
Interesting. So overexposure to Magnificent Seven, that is definitely something that we'll want to keep an eye on here in the region. Well, that's Diego Lopez, founder and managing director at Global SWF. Thanks so much for all your time. Well, coming up, emerging market assets underperformed in 2024, and there are many risks ahead for EM bonds and currencies. We get a deep dive on this year's outlook next. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Kenya's annual inflation rate has risen for a second successive month as higher food and transport costs offset the effects of the shilling's world-beating performance. For more on this, Bloomberg's Ondiro Oganga joins us now. So, Ondiro, Happy New Year. Good to see you as always. What more do we know about this inflation data?
Hi, Christine. So we are seeing food and non-alcoholic beverages rose by 0.7%. And as you mentioned, it's accelerated by high prices of food. Then you have the index for housing, electricity, water, and gas rising by 0.2%. And this is because we've been seeing power prices surge. Transport also, like you mentioned, went up by 1.8%. But this is mainly because transport operators increased the prices. But the central bank is not very worried about the increase in inflation. It's still within their target range of 2.5% to 7.5%. And even in December, we saw them cut rates for the third consecutive time to 11.25% from 12%. All this with the hope of easing inflation and also injecting some form of capital in the private sector through affordable and accessible capital. We are also seeing that the shilling has helped with inflation because it has gained 21% against the dollar in 2024. And this went a long way in reducing import prices, particularly raw materials and finished goods such as fuel.
And when we look into 2025, what does the political landscape look like, the economic landscape? What are we expecting to see from here?
On the political landscape, tension is expected to continue escalating. Take 30th of December, for example. There were protests over abductions of government critics. And even though it was the festive season, there was still a fair turnout in Nairobi and pockets of protests across the country. And one of the protesters even told Bloomberg that we are here to demand that the government releases our brothers who've been abducted. The Kenya National Human Rights Commission says 82 people have been abducted since June 29 and still missing. Mid-December to date, 7 have been abducted, and we had Billy Mwangi's dad, who's one of those who've been abducted, breaking down in court, asking for the whereabouts of his son. Peter Mutete's mother showing up to the protest, and there's also one, Gideon Kibet, who was abducted, and he's popular cartoonist, and he's been making satirical silhouettes that have become the face of the rebellion against President William Ruto on social media. And we're having the government sing two tunes. The police are saying they do not have any of their abductees in their custody, but President William Ruto in his New Year address says, and I quote, "It cannot be denied that there have been instances of excessive and extrajudicial action by members of security forces." And these two conflicting messages from the government continues to aggravate Kenyans. So tension likely to continue for a better part of next year.
Thanks so much for breaking that down for us, Ondiro. Appreciate your time. That's Bloomberg's Ondiro Oganga in Kigali, Rwanda. Now for a look at some of the other stories that we are following this morning. Ivory Coast's president has announced the withdrawal of French troops from the country beginning this month. It adds to a growing number of Francophone states that have asked the former colonial power to relinquish its military presence in West Africa. The move is a blow to President Emmanuel Macron's strategy to redefine French military power in the region. Nigeria's president has announced a new state-owned company dedicated to increasing access to credit for individuals and critical sectors of the economy. Bola Tinubu used his New Year's speech to unveil the National Credit Guarantee Company, saying one of its aims will be to support underserved groups such as women and youth. It'll be comprised of public and private investors and is expected to start operating by the end of June. Coming up, one of India's largest refiners is forced to find more expensive crude cargoes from the Middle East to make up for lower supplies from Russia. We will get the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Emerging market bonds and currencies are entering a period of increasing risk due to the combination of a hawkish-leaning Federal Reserve, uncertain U.S. fiscal and trade policy, and China's tepid recovery. For more, let's go to Bloomberg MLive Asia team leader Garfield Reynolds. So, Garfield, we have a lot of underperformance for EM assets over the course of last year. What is the outlook for this year?
Well, the outlook for this year, and actually like a lot of outlooks for this year beyond even emerging market assets, is for at least the short term more of the same. Investors and strategists see a lot of very strong headwinds for emerging market assets. Some of those center around the potential for President-elect Trump to bring in tariffs. And it's not that even necessarily emerging markets are in and of themselves more vulnerable to tariffs. It's more that they are already a weaker investment case than a lot of developed markets. So that's what's got traders on edge. In particular, the currency channel could be a very important transmission mechanism for the impact of tariffs on emerging markets. The US dollar has already been very strong in the last little while, and again, that's something that really hits a lot of emerging markets very hard. There is also, aside from those sort of factors, the concern that there are a range of economies who are particularly vulnerable because of a combination of large fiscal and current account deficits, and that's the sort of thing that will get investors to pull out of such markets very rapidly. Brazil, Turkey, and South Africa are three in particular.
Yeah, and we know what Donald Trump is going to do is going to very much matter for these emerging markets. How important is what the Fed does? I mean, how much does movement for these markets hinge on whether the Fed continues to cut next year or perhaps hits pause for longer than many people may think?
Yeah, well, that's definitely been perhaps an underappreciated aspect of what has been going on. A more hawkish Fed means, again, a stronger US dollar and a sort of sustained stronger US dollar. I think you can look at the Fed as a risk factor that's less volatile than what might come out of the White House. So if the Fed, at the moment, traders are pricing for just one Fed cut by the end of the first half, quite possibly only coming in June. That's going to be the sort of thing that will keep on driving the US dollar higher and expose emerging market currencies in particular to the sort of shocks we saw that hit, say, the Brazilian real when there was the concerns about Lula's attempts at fiscal repair. The Turkish lira has always been volatile. It could readily drop a lot. So I think emerging market investors would actually be hoping that the Fed delivers a rate cut before June and at least delivers two, if not more. That's a scenario that rates traders in the US at the moment are not paying much attention to.
Garfield, thanks so much for that. I did want to ask you about our big take today, but we're not going to have time. So I just want to put on the radar of our viewers out there that today's big take is about Wall Street predictions for 2025. So do go and have a look at it because it's a lot about Trump, and there are some surprising calls in there. Well, one of India's largest refiners has been forced to seek alternative and more expensive crude cargoes from the Middle East to make up for lower supplies from Russia. For more, let's go straight to Bloomberg's Rakesh Sharma, who's in New Delhi for us. So, Rakesh, what is causing this? Why are we seeing limited flows of Russian oil going to India at the moment?
2024 didn't end up on a very cheerful note for the Indian refiners like Bharat Petroleum Corporation Limited. Their biggest and the cheapest source of suppliers, that is Russia, is unable to meet the demand of the world's fastest growing major economy. Supplies from Russia, which had surged to as much as 2.1 million barrels a day in the middle of 2024, shrunk to just 1.5 million barrels a day in December. The refiners have been hard to find enough Russian barrels to meet the demand of the refineries. The refiners are not clear as to what could be the reason behind this sudden shrinkage of the supplies. One reason could be that the domestic refiners in Russia, they have ramped up run rates just to meet the local capacity, local demand. The other reason could be that the Western sanctions could be finally having an impact on the availability of dark fleet, due to which caused the flows to India to dip. The refiners are having it a hard time to replace those cheap discounted barrels. Thankfully for the refiners, there is no dearth of crude availability in the market, but the alternate barrels are coming up at a higher price. The refiners are saying there is a differential of at least $2 a barrel on every alternate crude cargo they have to buy compared with what they are getting from Russia. The problem is that this issue was not limited to the last year. The refiners are saying that they have not been able to secure enough cargoes for January loading and February delivery, and they are not sure how long this shortage in the supplies will continue. This shortage in the supplies comes at a very crucial time for India. The International Energy Agency has predicted that India's domestic oil demand is going to surge by 300,000 barrels a day in 2025, making it the global engine of oil demand growth. But this shortage of supplies from Russia will be making it harder for the refiners to find the alternate barrels, cheaper barrels from the market.
Yeah, Rakesh, thanks so much for breaking all that down for us. I think the key thing to watch here will be whether this trend continues in 2025. So hopefully we'll have you back on to talk more about that. Now, for a look at some of the other stories that we are following, football star Lionel Messi has listed his real estate properties, valuing the portfolio at $232 million. The company, called Edificio Rostower Soshimi, has been listed as a real estate investment trust and owns 7 hotels, commercial real estate for shops and offices, as well as houses. Rostower posted losses in both 2022 and 2023 and has been listed on a small digital-only Spanish bourse called the Portfolio Stock Exchange. Well, we are nearing the end of the first hour of Horizons Middle East and Africa. Let's have a look at how markets are doing globally. If we look at U.S. equity futures, we are seeing a lot of strength that indicates we may be heading for a day in the green on Wall Street. But I want to note that we are seeing a lot of weakness coming through in Asia when it comes to the stock market, so some disjointed trading there. That's it for the first hour of Horizons Middle East and Africa. Stay with us for the second hour. I'm Christine Burke in Dubai, and this is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. The FBI is investigating a suspected terrorist attack in New Orleans after a truck plows into a crowd, killing at least 15 people. Police are also looking into whether a Tesla cybertruck explosion outside the Trump Hotel in Las Vegas may be related to the New Orleans incident. Plus, no more Russian gas will flow to Europe via Ukraine after both sides allowed a transit deal to expire, closing off a route that has operated for 5 decades. Good morning. It's just gone 9 a.m. across the Emirates. I'm Christine Burke in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it has just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. Happy New Year to you, Christine.
Yeah, you too, Jen, and it's really nice to have you back. I know you are just returning from leave, so thanks for being here with us. Let's start by taking a look at how markets are shaping up on the first official trading day of 2025. And it's really interesting, actually, because when you look at the U.S. futures market, we are seeing a pretty significant amount of strength this morning, indicating that there is a bit more optimism than perhaps there was a few days ago, as we had seen the S&P 500 drop for 4 of the last trading sessions of the year. That was the longest losing streak for losses since September. So there was a lot of weakness to close out what was otherwise a very impressive year for U.S. equities. And when we look at the MSCI Asia Pacific Index, we are down quite a bit. A lot of losses being had in China at the moment, as we got some PMI data that seems to have disappointed the market. Now, going cross asset, the dollar is a touch weaker this morning. Not a whole lot, but remember, we're coming off of the best year for the dollar since 2015. And then Brent crude, that is another place we are seeing strength this morning, almost at $75 a barrel now. So a bit of a positive start for Brent crude, I would say. Now, let's talk about another commodity that has just come off the back of a stellar year, and this is gold. So gold closed out 2024 with a gain of 27%. This came on the back of central bank buying, and also as we saw the Fed cut interest rates right? And there were geopolitical tensions that led investors to probably just buy a little bit more bullion than they may have otherwise. So that was the performance for gold. And you could see that it really outperformed other metals. Base metals as a whole were up just 6%. And iron ore and lithium, which are two other key metals in the metals complex, those fell deeply. And that is because we had weakness in the Chinese economy that kind of were playing out in front of mind. Before we move on and go to other stories, I just want to note that we are seeing a lot of movement this morning in the metals market, actually. Spot silver up 1.5%, palladium up 1%. So a place to keep your attention because it looks like precious metals are getting off to a strong start in 2025. Well, Russian gas has stopped flowing to Europe via Ukraine, closing off a route that's operated for 5 decades. The stoppage will force Central European countries to source more expensive gas from elsewhere. Bloomberg's managing editor for commodities and energy, Clara Ferreira Marquez, joins me now. So, Clara, how is this going to impact global energy markets?
So, look, it's only 5% of Europe's demand that is accounted for by this pipeline, so it's not dramatic. This isn't a repeat of the shock of 2022. But it is going to make a tight market tighter. Europe will be competing for LNG with Asia, for example. You're going to see a lot more volatility. I think the most interesting thing really about the end of this pipeline is the extent to which it's a milestone. It's a milestone in weaning Europe off Russian gas, and it's something of a historic change. This is the connection, the Russian gas connection and the Soviet gas connection to Europe dates back, as I think you said earlier, to the late 60s. So this is really the end of that, and a significant blow to Vladimir Putin, who, while he doesn't rely on gas, this is a very useful $6 billion that comes from this pipeline every year.
Yeah, and you mentioned that this is critical money for Russia that it likely would need. What does this mean for Russia beyond that? What are the implications here for its own market?
Well, it's likely to see Russia double down on its liquefied natural gas target. So Russia really wants to export a lot more gas. If it can't do so via pipeline to Europe, it is going to have to do a lot more LNG. And LNG is much more complicated for Russia, largely because of US sanctions. It's one of the areas where sanctions imposed by Washington really have curtailed exports and made it extremely difficult for Russia to find buyers.
Well, it's Bloomberg's managing editor for commodities and energy, Clara Ferreira Marquez. Thanks so much, Clara. Well, over to you, Jen, now.
Yeah, that's right. Let's turn to the other top story that we are following, and that is the incident happening. Actually, let's go to break. Still ahead, we'll get the outlook for global markets with central banks' rate path and geopolitical risks in focus. We'll speak to Banque Syz. They'll be joining us next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Well, Chinese stocks are lower on the first trading day of the new year as weak economic data and the prospect of more U.S. tariffs hurts sentiment. The moves reflect caution as traders begin to execute asset allocation strategies for 2025. Joining us now for more is the CIO of Banque Syz, Charles-Henri Monchau. So, Charles, thanks so much for joining us on the first trading day of the new year. Let's talk about your outlook for 2025, the good, the bad, the ugly. What is top of mind for you?
Good morning and Happy New Year. Yes, on the good side, I think it's quite consensual, the fact that we have a pro-growth, pro-business U.S. administration, a record number of central banks cutting rates. At the same time, earnings growth projections in the U.S. are double digits. So that's the good part. The bad part is that valuations are rather demanding, at least for mega cap tech stocks. There's also a record low in terms of cash positioning. So it looks like a very extended market, which means that any negative news, negative surprises might have, let's say, a disproportionate effect on the market. We have seen a very quiet market in 2024. So we do expect a more bumpy road ahead. And maybe, a spike in volatility later this year. But overall, the outlook remains positive for stocks over bonds.
Yeah, and you mentioned the elevated valuations that we've seen in the U.S. And we have an S&P 500 that is trading around 28 times earnings over the past year. Do you think that these valuations will really start to become a problem for some investors in 2025, and specifically for those mega cap tech names in the Magnificent Seven?
Well, the thing is that indeed they deserve these valuation premiums when you look at return on equity, free cash flow generation. Also, net supply is negative. It's more and more difficult to get access to these stocks because they are buying back their shares. So the number of stocks available to play the AI theme is quite narrow. On the other hand, we saw in the last few years of the year that a few days of the year is that if you have a rise in bond yields like what we have seen on the 10-year, immediately we see some pressure on these stocks coming. So it will be very important to look at what the bond market is doing, because we know that when bonds start to look even cheaper compared to stocks, the ones which are taking a hit are usually these very extended over-owned stocks, the Mag 7 that you just mentioned, the Mag 8, with Broadcom now part of the basket.
And it sounds like you are pretty bullish on U.S. equities when I look at the insights that you've sent over before this. And you also mentioned that you see corporate earnings growth at double-digit rates next year. What, to you, is the biggest driver for corporate earnings?
Well, if you look at the composition of this double-digit earnings growth, a lot is again coming from the tech sector. But we believe that the good news is that in order for this AI productivity game to roll out in the coming years, we not only need, let's say, these asset-light assets to do well, but we also need the heavy assets, like, for instance, electric power, infrastructure, to do well. We also need to see the AI story starting to feed into other sectors. Take, for example, the healthcare sector, which has been beaten down, which is very, let's say, cheap. AI is likely to transform many healthcare stocks, including in the medtech parts. So we think that the AI story is going to broaden to the rest of the market, which means that these earnings growth will be supported not just by these Mag 7 or Mag 8, but also by other stocks and sectors within the S&P 500.
When we look to 2025, Charles, where is there potential for surprise? You've actually listed 10 different surprises that we could see. Some of these are really interesting. Doge going global, BRICS Plus adopting Bitcoin as an alternative to the dollar. Talk to us about some of the surprises that that are on your radar.
Well, the Doge story, we think, is something that should not be underestimated. We have seen this push towards, let's say, less government, less fiscal spending happening in the rest of the world. Look at Argentina, by the way, which is the best performing stock market in dollar terms in 2024. And some of these very strong performance is coming from the fact that Javier Milei has been implementing some very, let's say, tough measures on the fiscal spending side. And we know that fiscal spending, government debt, is one big risk, one big issue in the US. So we need to see how the Musk-Trump administration is going to roll out these Doge measures. And if indeed there are some success there, maybe it will take some pressure out of the bond market, and that could help, let's say, stocks move higher. So this is one of the things we look at. And as you mentioned, the BRICS dimension is also very interesting. Could Bitcoin become one of the currencies used by non-G7 nations in order to emancipate themselves from the US? There are many, every year there are many surprises, and we know that there are also the unknown unknowns, which will probably be part of the story in 2025.
Yeah, one of your other surprises is that we potentially see Musk and Trump turn from BFF to foes. And I do think that's something that everyone was probably watching quite closely. If we also look to your main themes that you're looking at for 2025, you say that Europe is facing existential choices. What do you mean?
Well, what we mean by that is that we know that part of the success of US story has been a very big fiscal stimulus, which has been lacking in Europe. And now we have the two largest economies in Europe, i.e. Germany and France, facing main very, very big political issues on the domestic side. You know, both of them are struggling with their own policies, which means that it's very unlikely that they can come together to drive a new fiscal spending in Europe and maybe some mutualization of EU debts. And that's becoming an issue because we can see that EU is becoming smaller and smaller at the top level, including in the stock markets. 75% of the world stock market is now driven by the US, and Europe is becoming thinner. So we think that it's now with the Trump coming back to power, it's time for Europe to wake up. And we don't see this happening in the near term, but we need to see something positive happening in 2025 because we need, let's say, a more balanced world, and Europe is becoming smaller and smaller.
Thanks so much for sharing all that insight with us. That's Charles-Henri Monchau, CIO of Banque Syz.
All right, now let's turn to another top story we're following, and that is in the U.S. The FBI says it's investigating a suspected terrorist attack and hunting possible accomplices after a truck was deliberately driven into a crowd in New Orleans, killing at least 15 people. President Biden says authorities are looking into any possible link between the attack and the explosion of a Tesla cybertruck in Las Vegas.
We're tracking the explosion of a cybertruck outside the Trump Hotel in Las Vegas. Law enforcement and the intelligence community are investigating this as well, including whether there's any possible connection with the attack in New Orleans. Thus far, there's nothing to report on that score at this time.
For more, let's bring in our senior editor, Bill Ferries. Bill, thanks so much for joining us. Give us the latest in this investigation. We've been getting details slowly trickling out. What do we know right now?
Well, as President Biden said there, it's not clear if there's any connection between these two attacks. We know a bit more about the situation in New Orleans, where 15 people were killed and dozens wounded. The suspected driver in that attack was killed at the scene. Reports are that there were some IEDs, explosive devices, in his truck, along with a flag supporting Islamic State. Investigators have said that there may have been some other potential explosive devices placed elsewhere along that street. I think we'll get more details about that in the U.S. morning. Investigators did say they're not sure that this driver acted alone, that this suspect acted alone. He may have had accomplices. They are reaching out, looking through his social media, of course, also trying to talk to potential people who knew him, and the investigation has gone on to Houston as well in terms of where they are looking for more evidence in this case. Again, it's not clear that these two situations are linked, but both occurring within a few hours of each other just after midnight on New Year's Eve is kind of fueling some of those suspicions that there may be connections.
Absolutely. And we are hearing a lot of sentiment around potentially what this could mean for security in the U.S. What exactly could this mean in particular for that and also for incoming President-elect Trump?
Well, I think when you talk about the coming administration, I mean, obviously large crowds gather for a presidential inauguration. I think there's going to be another close look at security in Washington, but in cities around the U.S. Bourbon Street in New Orleans is obviously a very popular place for large crowds to gather all times of the year. I think there's going to be a lot of questions about why it was perhaps possible for someone to drive around a police barricade and go down the road. I think just in general, you're going to have a relook at security across the U.S. At major places where people gather regularly. The New Orleans was expected to host on Wednesday night, supposed to host a major college football game. That was postponed until Thursday, and I imagine we're going to see a huge ramp up in security for that when that takes place Thursday in the U.S.
Certainly. Our senior editor, Bill Ferries. Bill, thanks so much for the updated reporting there. Now, coming up, Kenya's annual inflation rate climbs for a second successive month. We take a look at the country's economy and politics next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Kenya's annual inflation rate has risen for a second successive month as higher food and transport costs offset the effects of the shilling's world-beating performance in 2024. For more on this, let's bring in Bloomberg's Ndiro Oganga, who's joining us now from Kigali. So, Ndiro, walk us through this. What more do we know about the situation in Kenya?
Hi, Jen. So we're seeing food and non-alcoholic beverages prices rising by 0.7%, which is slightly higher than the previous year. And this is attributed to a rise in food prices, particularly groceries. Then you have the index for housing, electricity, water rising by 0.2%. And this is attributed to power prices surge. Transport, like you mentioned, also increased by 1.8%. But this is because operators chose to increase prices. But even with inflation rising to 3%, the central bank is not yet worried. This inflation is still within their target range of 2.5% to 7.5%. And in December, we even saw them cut rates for the third consecutive time, bringing it down to 11.25% from 12% with the hope of continuing to ease inflation. And also, like you mentioned in the intro, the shilling has been another great buffer for inflation and also the economy. It gained 21% in 2024, and it helped cut import prices. We saw the prices of raw materials and also finished goods like fuel increase or rather decrease.
That's welcome news, Ndiro, for the government, especially considering the unrest that they saw in 2024. What does the political landscape, though, look like in 2025?
Jen, tension is likely to remain. You take 30th of December, for example, there were protests against abductions of government critics. And even though it was the festive season, there was a fairly good turnout in Nairobi and pockets across the country. We had one of the protesters telling Bloomberg that we are here to demand that the government releases our brothers who have been abducted. And in a statement, Kenya National Human Rights Commission says 82 people have been abducted since June, 29 are still missing. Since mid-December, 7 people have gone missing, including Billy Mwangi, whose dad was in court. He broke down asking for the whereabouts of his son. Peter Mutete's mother joined the protest asking for the release of his son. And there's also Gideon Kibet, who's a cartoonist, and his satirical silhouettes of the president have gone viral on social media. On the other hand, you have government giving two conflicting tones. The police are saying they don't have any of the missing persons in their custody. But in his end-of-year speech, President William Ruto says, and I quote, "It cannot be denied that there have been instances of excessive and extrajudicial actions by members of security services." So this conflicting messaging from the government will continue to aggravate Kenyans.
Thanks as always. Bloomberg's Ndiro Oganga with the latest for us in Kigali, Rwanda. Ndiro, thanks so much. Now, for a look at some of the other stories we are following this morning, Ivory Coast president has announced the withdrawal of French troops from the country beginning this month. It adds to a growing number of Francophone states that have asked the former colonial power to relinquish its military presence in West Africa. The move is a blow to President Emmanuel Macron's strategy to redefine French military power in the region. Nigeria's president has announced a new state-owned company dedicated to increasing access to credit for individuals and critical sectors of the economy. Bola Tinubu used his New Year's speech to unveil the National Credit Guarantee Company, saying one of its aims will be to support underserved groups such as women and youth. It'll be comprised of public and private investors and is expected to start operating by the end of June. A new round of nuclear talks between Iran and European countries is set to begin on January 13th in Geneva. The semi-official Iranian Students' news agency quotes the nation's deputy foreign minister saying the meeting will be about dialogue and consultation, not negotiation. Representatives from the UK, France, and Germany are all expected to attend. And finally, former Israeli Defense Minister Yoav Gallant has announced he will soon resign from parliament. Gallant was fired as defense minister on November 5th over what Prime Minister Benjamin Netanyahu then described as, quote, significant gaps between the two men over the war. His resignation is likely to make it easier for Netanyahu to muster majorities in some crucial parliamentary votes. And finally, Apple will pay $95 million to settle a class action suit over the privacy of Siri users. The August lawsuit claimed users' rights were violated when human reviewers listened to customer recordings in order to improve the voice recognition service. The settlement will require a federal judge's approval. Now, coming up, our exclusive interview with the CEO of Zambia's biggest bank. She is with us next. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. The FBI is investigating a suspected terrorist attack in New Orleans after a truck plows into a crowd, killing at least 15 people. Police are also looking into whether a Tesla cybertruck explosion outside the Trump Hotel in Las Vegas may be related to the New Orleans incident. Plus, no more Russian gas will flow to Europe via Ukraine after both sides allowed a transit deal to expire, closing off a route that has operated for 5 decades. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasacha in Johannesburg.
And I'm Christine Burke in Dubai, where it's just gone at 9:30 a.m. Welcome to Horizons Middle East and Africa.
Yeah, that's right, Christine. Nice to be back and to be with you on the first full trading day in 2025. Surprising that we are in this new year. Let's just take a look at where markets are positioned right now. We saw a lot of weakness, a bit of weakness actually to close out 2024. Right now, if you look at U.S. futures, nudging slightly higher as far as the S&P futures and NASDAQ futures go, potentially looking to reverse those declines we saw for the indices to close out 2024. Both of those indices actually saw 4 consecutive down sessions just closing out the year, and yet they still had quite a banner year for 2024. S&P capped the year up 23%. We're also seeing some activity when it comes to the Bloomberg dollar, pulling back ever so slightly in 2025 trades. But 2024, again, another banner year for the Bloomberg dollar. Its best in nearly a decade if we take a look at that. And the outlook for the greenback in 2025 still looks quite promising thanks to that cautionary Fed rate cut expectations and, of course, a strong U.S. economy. We'll have to see what the president-elect, though, ushers in and how that affects it. Oil also in focus. We have Brent crude on the board at trading around 74.82. We got a report overnight noting the shrinkage of U.S. crude inventories, but right now still seeing some upside as far as it comes to crude. And I'm also paying close attention to what is going on in emerging markets. As always, we did note the strength in the USD. Emerging markets, though, still closing out 2024 with some gains. That's a look at a 1-year chart. We saw the MSCI index of EM stocks notching a 5% return. Its second straight year of gains. That is good for the index and for EMs, but it still pales in comparison to what we saw for global equities, up about 17%, and the S&P, as we mentioned, closing out 2024 up 23%. So we will see what the outlook for emerging markets is for the rest of 2025. But let's stick on emerging markets and turn to Zambia. The Bank of Zambia has started a stability and resilience facility to safeguard the financial sector in the wake of the country's worst drought in more than a century. This comes as the nation's inflation accelerates to a 3-year high. For more, I'm joined now for an exclusive interview with Mukwandi Chibesakunda, the CEO of Zambia's largest bank, Zanaco. Thank you so much, Mukwandi, for joining us. So we were just mentioning what the central bank is planning on doing, 5 billion kwacha stability facility. What is your take on this? Could this potentially accelerate inflation? How could this affect the economy?
The overall view from the central bank is that we need to support the growing economy of Zambia. And in view of the recent developments with regards to the drought and the various other headwinds that have been faced, the central bank is doing something about it. You'll recall that during the COVID-19 period, the Central Bank of Zambia also did something similar with a medium-term funding facility, which was 10 billion kwacha, and that supported the market, particularly impacted by the COVID issues that were faced in the country with the closure of certain companies and the fact that we're not able to have the tourism sector at the level that it should be. So now, with the recent development, the biggest drought that we've faced in years, and that having an impact on our energy sector and also an impact overall on food security and the overall economy, the view from the central bank is that they must do something about it. And we welcome this move from the Bank of Zambia because it will harness the capacity of the economy to come out of where we have come from in terms of the drought. Happily, we seem to have a bit of rain, particularly this week in the new year. Our hope is that this will mean that we're able to then recover, both in terms of the agriculture sector as well as the energy sector, because Zambia happens to have 85% of its power hydro-powered, with our local economy suffering because of the drought that has been fueling the inflation, as you earlier alluded to. Our expectation is that with the action that the central bank has taken, we should be able to then cushion the overall economy and the average person in Zambia, and it's a welcome move.
Mukwandi, talk about cushioning, because we did mention inflation accelerated for an 18th straight month in December. Economic growth in 2024, 1.2%. What does cushioning look like, especially if you consider the central bank is still raising interest rates?
I suppose it's about what is better, the better of whichever evils you're looking at, because part of the reason why we have had the racing inflation is because of our import-driven economy. We're having to also import fuel, for example, which is actually covering a lot of the power deficit that we've had with generator power, even though there is also a lot of initiative with regards to solar energy. And as Zanaco, for example, we're funding a lot of these companies that are putting in place solar, and also the consumers that are taking on the solar power. If we look at the South African example and how they have come out of their energy deficit, it's because of private individuals and companies putting up solar and feeding the grid. This is something that, in our view, because the Zambian market has also been allowed to feed the grid most recently over the last year, so the policy reforms are actually going to help us to come out of it. So in terms of inflation, yes, it is higher, but it could have been even higher if there was no activity taken to begin to address the real economy.
When do you believe it will start coming down then?
Our view, if you look at the statistics that were given by the Ministry of Finance, the view is that during the course of 2025, if we have good rainfall and we also are able to conclude our debt restructure activities, then by 2026, 2027, the economy should begin to recover. It is something that Zambia has been through before, this kind of restructure process. And we've seen how when we take the steps necessary to resolve any economic difficulties, we're able to come through it. So our view is that the Ministry of Finance has done everything that they can to get the debt restructure done. Now we're relying on good rainfall as well as other activities, as I earlier alluded to, addressing some of the dependencies on hydropower so that we go into solar and other initiatives. And our view is that over an 18-month period, if everything else just holds, we should be able to begin to see an improvement.
It's hard to see. It's hard to say whether or not things will hold, but that is an optimistic viewpoint. Mukwandi, let's talk about channeling investments, because you mentioned that. Zambia is, of course, looking to be a powerhouse in copper production. Are you actually seeing that activity on the ground?
Yes, certainly. And we can see the investments coming into the mining sector. You may recall that Zambia was actually one of the top copper producing countries. And you will recall that actually at one point we were second worldwide. We're still in the region of the top 5. And our view is that the mining sector continues to drive the Zambian economy. And we've had a number of companies that have come into the country to invest in the mining sector most recently. And we believe that these companies that are coming back or coming in will impact the overall economy by growing copper output.
Oh, I believe I believe we lost Mukwandi Chibesakunda. We were just speaking to the Zanaco CEO from Zambia, but hopefully we will get her back. Thanks so much for those insights. Christine?
Now let's talk about markets some more, Jen, because emerging market bonds and currencies are entering a period of increasing risk due to the combination of a hawkish-leaning Federal Reserve, uncertain U.S. fiscal and trade policy, and China's tepid recovery. For more, let's go to Bloomberg MLive Asia team leader Garfield Reynolds. So, Garfield, talk to us about the hazards for emerging markets in 2025.
Yeah, well, I mean, you gave a pretty good summary right there, Christine. That combination of the Fed, it's turned hawkish, very much so relative to what had been expected just a few months ago. That has really driven up the US dollar, and it's also driving up yields both in the US and therefore around the world. At the same time, we've had the election of Donald Trump. He's been talking again today about how much he likes the idea of tariffs, how good they would be for the US. That's obviously a major concern for emerging markets. And it's not just about what the US is doing, though. It's also very much about concerns that a number of the biggest emerging markets face current account deficits, fiscal deficits, a combination of those things which you will make investors skittish and willing to pull out at the first sign of trouble. We've already had what went on with Brazil in December, where the real dropped and Brazilian assets in general sold off because Lula, his government delivered an attempt to rein in its fiscal situation that left investors unconvinced that he had the will to do what it would take to repair the situation. So that's a microcosm for just how vulnerable emerging markets are in that environment.
As we look into 2025, I want to draw our viewers' attention to a story that was out yesterday. This is a big take, focusing on Wall Street predictions for 2025. And when we look to this, of course, it is dominated by Trump. It really does go to show that the president-elect matters for markets in 2025. We collated over 700 key calls from more than 50 leading financial institutions. What were the big takeaways?
Well, in some ways, the biggest takeaway was one of the first institutions that's cited in that very comprehensive piece that you mentioned, which is Bank of America saying they see a Goldilocks outlook for the US economy and for the global economy. And there is a lot of that optimism there. Part of that is driven by an assessment that the victory for Donald Trump and for the Republican Party in both the House and the Senate means lower taxes, less regulation. That will further boost what's already a pretty robust US economy. There's been a lot of optimism percolating through from businesses in some of the surveys. You look at manufacturing surveys, services surveys, a lot of optimism there. You often get a boost in optimism after a US election because what was uncertain has become certain, but that seems to be multiplied by this idea of lower taxes. There is a lot of interest in what Trump will achieve and what that will mean for markets. In general, there's perhaps a little bit of complacency about tariffs, the idea that Trump might use those as a negotiating tactic, that he might be willing to go slow, and that he's not ready to upset the apple cart. That, to some extent, flies in the face of his first time round as president. You could even say it flies in the face of his willingness to disrupt matters. Last month, with the debt, with the debt ceiling situation, where we almost ended up with a U.S. government shutdown because he and Elon Musk piled in at the death, as it were, there. So that's a big part of the tensions going into next year. a lot of analysts on balance expect that, okay, yes, if tariffs drive up inflation a bit, maybe if they retard growth a little bit, and the immigration impact on the job market is also of a concern, that's going to be countered by tax cuts, less regulation, and net, you're going to have a continuation of US exceptionalism, of strong growth for the US, and that's a double-edged sword for other markets, especially emerging markets. On the one hand, a slump in the US is not going to do much good for emerging markets. On the other hand, a strong US means a strong US dollar. That is going to make it difficult, in particular for those economies, developed and emerging, who have difficulties in and of themselves, which are going to make investors likely to flee those first whenever there are episodes of volatility that are created by either US economic data, what the Fed does, and of course what we're going to get out of the White House after January 20th.
All right, Bloomberg's Garfield Reynolds, thanks for all of that insight. And a couple of the other things this story says is that 2025 may not be the year of the bond, and that diversification is going to be the name of the game. Well, coming up, Chinese EV giant BYD ended the year with a new monthly sales record. We'll look at the outlook for electric vehicle demand in 2025 next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Chinese EV giant BYD hit a new monthly sales record in December, spurred on by subsidies and extra incentives to buyers. For more, let's bring in Bloomberg Asia transport reporter Linda Liu, who is in Hong Kong for us. So, Linda, what does BYD's record sales signal for China's EV market in the coming year?
Yeah, BYD notched more than 510,000 vehicle deliveries for December, and that's actually vaulted into a record 4.27 million cars sold this year. So they've had a really spectacular year, like you said, fueled by this government subsidy as well as incentives and discounts to lure customers in. But this really strong performance by BYD, the market leader, doesn't leave much space for some of the other players. You've got the smaller EV makers struggling to kind of maintain their market share in the Chinese electric vehicle market, signaling that we're going to see even more competition in 2025, as well as consolidations.
And Linda, when we talk about, in contrast, Tesla, we're going to get their sales for the fourth quarter sales later this week. Talk about how BYD compares to Tesla and potentially what this could mean for global EV demand.
Yeah, so out of BYD's 4.27 million deliveries for 2024, about 1.76 million of those are pure electric vehicles. That compares to Tesla's guidance of hopefully reaching 1.8 million or so EV deliveries for 2024. And it remains to be seen whether Tesla can hit that guidance, because analyst estimates have put fourth quarter deliveries, even though it's going to could be a record high, it might just fall short of that guidance. So coming into 2025, BYD and Tesla are probably going to keep at this competition for the world's best-selling EV brand, and BYD is really closing the gap with Tesla.
Fascinating. A lot to pay attention to. Bloomberg Asia transport reporter Linda Liu in Hong Kong for us. Linda, thanks so much for your reporting. Now, coming up, China's manufacturing activity slowed in December as investors await for more economic stimulus. We get the latest on the world's second largest economy next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Christine Berg in Dubai. A private survey of China's factory activity slowed its pace of expansion in December. The Caixin number, coming in at 50.5, fell short of the average estimate. Let's bring in our China correspondent, Min Lo. So, Min, I'm looking at my screen here, and there is a lot of red coming across from Chinese equities. We're now looking at losses of more than 2.5%, really picking up over the last 20 minutes or so. Walk us through the data that we got and why there has been such a strong reaction in the market.
Yes, definitely seeing a lot of reaction in the markets, not just in the equity markets, but also the bonds. Investors have been piling on to those bonds. We are seeing the 10-year yield hitting a record low of 1.64% today. And as you said, it's a weaker print in the private survey, the Caixin manufacturing PMI coming in at 50.5. Quite a sizable miss given the estimates came in at 51.7. This is tracking the miss that we saw in the official PMI data that came out on Tuesday as well. That came in at 50.1. So again, it is that uncertainty, the political uncertainty, lack of clarity over what Trump's policies will be, that is perhaps weighing on these purchasing managers' expectations for next year, especially given that we are very close to the inauguration date. Any shipments going out from China to the U.S., by the time it reaches the U.S., we could possibly see a change in trade policy. And if you look at the forecast there for the non-manufacturing PMI for Caixin, that is expected to come in at 51.4, slightly weaker than the previous month, but we did get a big beat in the official non-manufacturing PMI on Tuesday. That is driven by a rebound in the construction PMI, and we got those December home sales data out today as well, showing that home sales remain unchanged from the previous year. That is a good sign of stabilization, given that almost every single month last year we saw home sales declining, except for that bar of green in October, and of course in December it's coming in at 0%. So some fragile signs of recovery there.
Yeah, and some other headlines coming out of China over the last couple of days that have been grabbing quite a bit of attention. We heard from President Xi Jinping, and he said that China is due to hit its growth target of around 5% for 2024. Tell us about the comments and what else he said.
Yeah, so we will get the exact data in mid-January, but President Xi had already foreshadowed that China is expected to hit that growth target. He was really projecting this sense of confidence in the economy during his New Year's Eve speech on Tuesday night as well, where he highlighted some of the breakthroughs that China has made, especially in some of the more critical fields such as AI development, quantum computing, its space missions, for example. And these are all areas where China is locked in this tech competition with the United States. And geopolitically as well, he talked about the importance of that one country, two systems model for both Hong Kong and Macau. He also mentioned that inevitable reunification with Taiwan, with the motherland. And this comes as President Lai Ching-te from Taiwan also gave his version of the New Year's speech to the Taiwanese people, vowing to increase defense spending and to display Taiwan's resolution in fighting. And against this backdrop, there is that uncertainty over Trump's policy on Taiwan, given that Trump has repeatedly said that Taiwan should pay for U.S. protection.
Yeah, thank you so much, Min, for breaking all that down for us. That's Bloomberg's China correspondent, Min Lo. Now, we are about to wrap up here, but before we go, just note we are seeing solid strength in futures and a lot of weakness in China on the first official trading day of the new year. And that is it for Horizons Middle East and Africa. I'm Christine Burke in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe next. This is Bloomberg.